Big news of the day today was Chair Powell speaking to Congress. We'll take a look at that in a second, as well as traditional markets and Bitcoin. A couple of interesting things going on there as Bitcoin bounces around. Markets kind of up and down a little bit today, started down quite a bit. Well, not quite a bit this morning, 1% pretty much across the board. Bounced back this afternoon, was up by about 0.5%. Now we're finishing out a little bit flat here at 4 p.m. Eastern Standard while I am making this video. And the Dow Jones flat, S&P basically flat, NASDAQ basically flat. But again, the big news of the day was Chairman Powell. And what he said was, at the Fed, we understand the hardship high inflation is causing. We are strongly committed to bringing inflation back down, and we are moving expeditiously to do so. He said, we have both the tools we need and the resolve it will take to restore price stability on behalf of the American families and businesses. So he basically came out and said, look, we understand what our job is and we are getting after it and we are not going to back down. He also said that recession is certainly a possibility. It's not our intended outcome at all, but it's certainly possible. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market. Achieving a soft landing in which policy tightens without severe economic circumstances such as a recession will be difficult, he added, but it's our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months. Thinking here of the war and commodities prices and further problems with supply chains, Powell said, the question of whether we're able to accomplish that is going to depend on some extent of factors that we don't control. Over the coming months, we'll be looking for compelling evidence that inflation is moving down. This is key. Consistent with inflation returning to 2%. He's targeting that 2% number. He said, we anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. So he's leaving himself an out. But basically saying they're going to keep raising rates. He was asked about a 100 basis point rate hike next month instead of a 75. He said that's definitely a possibility if the numbers come in hotter than expected. So markets are digesting all this, closing a little bit, on the positive side today, flat, but up a little bit. So been all over the map today. Bitcoin is working the line that we drew out the other day between 19 and 20,000. This is Bitcoin on the daily. And like we talked about the other day, clearly working these levels as it continues to consolidate. This area here was the Do Kwon situation that kind of interfered with what Bitcoin has been doing on this unwinding, working the levels before additional downside. So that's kind of what's been going on Bitcoin, just working these levels, working its way down, basically deleveraging and repricing, to the current economic conditions. So the question is, what is really going to be the next thing and when will the Fed back up? So the Fed said they're targeting 2%. How long will it take inflation to get under control? Well, we're waiting for, there's factors that they can't affect, right? They can affect demand and they can destroy demand, which is what they're doing. They want housing prices to come down. So you raise interest rates on housing, that destroys, demand in housing. They want, energy prices to come down. They can't really affect that through interest rate policy. They can't really affect that through demand destruction because people have to move around. They have to heat their homes in the fall and winter. They have to consume energy. So there's really nothing they can do about that. And there are still supply chain issues out there with China lockdowns and things like that. China, every time they open up, they have to lock back down again. So they have not beat COVID over there, or at least what they think they're dealing with. And they keep, creating problems in the supply chain. So until that stuff is resolved, and of course the war in Ukraine resolves, there's still going to be inflationary pressures from that standpoint. So in terms of how long would it potentially take for inflation to come down, and when would the Fed be able to pull back a little bit on their interest rate hikes, ease up, start doing 50 or 25 instead of 75 or 100? I mean, the earliest you could possibly think that inflation would somewhat get itself under control, maybe by the end of the year, because everything's lagging, right? So the inflation print we just saw in this month was for May. So we know that June has been hotter than May in terms of inflation. Gas prices have gone up, everything else is getting more expensive. So we should have a higher print in June than we saw in May. If it comes in, 9 or 10% range, Fed might do 100 basis points. And if that's the case, the markets will really unwind before that. And June's numbers will be coming out in July. So June will be higher than May. July's numbers coming out in August. So you get the point. The summer spending, inflation, things are usually more expensive in the summer. People are out, getting out and about, from cabin fever during the pandemic, traveling, taking their vacations, stuff's more expensive. So, dipping into their savings, using credit cards, things like that. But as interest rates rise, credit debt gets more expensive. So people will pull back after the summer, going into the fall season to pay down a little bit of debt, build up savings again, because you have the holidays coming. So, a lot of that stuff's going to affect the economy. It's going to affect inflation, and it's going to affect demand. So it's going to be at least somewhere probably the end of this year, if at all possible, first quarter of next year, before we see inflation really kind of table, kind of level off, plateau. And, I don't see any real reversal in inflationary numbers until, some of these other issues resolve. So until then, that's what we're dealing with. The Fed's going to have to keep doing his job. And this could take a while. I mean, the last time we had a problem like this, Paul Volcker, increased rates by 10%, and it still took a while to get inflation under control. So this isn't something that can happen and will happen overnight just because of the type of inflation we're dealing with. The labor market is strong. There's still a lot of demand for employees. Employees still have the upper hand in the job market. So until that changes, you won't see a whole lot of deflationary effects in the labor market. That's still going to keep inflation running hot as costs rise. Restaurants are up, retail's up, and we're already seeing cutbacks. You see less people going out to eat, less people in theaters. So these types of things are already having an effect. But summer travel is not tapering back at all. People are still taking their vacations. So let's take a look at the traditional markets here. I'm going to put this on the weekly, and let's look at some of these weekly moving averages, see what the traditional markets are doing. Interesting here. This is the Dow Jones just now approaching its 200-week moving average. The only time it's really popped that in recent history was, the March pandemic, 2020. It broke down quite a bit below the 200-week moving average. It, had maintained support during the 2015, 2016 bear market cycle. In 2018, the last time the Fed cut back, it didn't even get down to that level, and we're already below in terms of the 200-week moving average where it was back then, closer. So this is a bit of a deeper dip, I think, than back then. Let's look at this 2018. This is the last time the Fed pulled back. The market dipped 19% and the Fed pivoted. So everybody looking for a Fed pivot, we're already there, and the Fed's not pivoting, and everything is fine. Nothing is breaking yet severely. Credit markets broke back here and froze up, so the Fed had to pivot. So we're already down to the threshold that normally the Fed would be thinking about doing something, but we're not seeing systemic cracks. So when did it break the 200-week moving average on the Dow? Well, it was back in the pandemic and back here in 2008-9 bear market. And this is the one I've been showing you the most here, is how these bear markets work, how they unwind, how long they take. This is on the weekly. And just this rollover of the top here from this first peak where the first drop was, and this is a very familiar looking distribution pattern here. And what we see is basically this area here, just that first area. I mean, that's 46 weeks right here alone, just in this little area here. And then this decline, and we talk about capitulation. This was a capitulation. This is when you see big down days, big down weeks in the markets where the circuit breakers are tripped and things like that. But that decline to the bottom right there alone was about 41 weeks. So this whole thing here was basically, what was that? What would that be? 72, this whole period here. Yeah, 86 weeks, for that whole period. And then to climb out of that. So a lot of people are talking about a V-shaped recovery, V-shaped bottom. This was with a Fed pivot. Well, not a Fed pivot, but Fed coming in, QE, bailing companies out, dropping interest rates. And it still took, just to get back to even in the markets, basically right about this area here, 213 weeks. So, that's 4 years, right? So it took to just get back from there. So 2009 and into 2014. So it takes time for these things to happen. Obviously the pandemic was a whole different story. That was panic selling. So I keep saying we have not seen capitulation. We have not seen panic selling. This is an orderly distribution with little bear market rallies and bounces on the weekly. So let's take a look at Bitcoin, and we'll take a look at Bitcoin in the weekly here because we've been tracking the 200-week moving average on Bitcoin, and it is below it for the first time, closing below, opening, and closing below the 200-week. If it maintains these price levels, hasn't really done that in its history. Of course, it only goes back so far. But, like I said, this is very reminiscent of what we saw on the Dow Jones, this whole distributive pattern here of this cycle. And this was all one cycle. The interesting thing is, so Bitcoin drops, 85% on average, right, in bear markets in the past. We already know that. Drew down, 90% the first time, and then it was 85, 86, 83, I think on the next ones. So the real question is, where is that measured from? So we know this was the cycle top here. This was the irregular correction. This is when alt season happened. So if you take 85% drawdown from there, that puts Bitcoin, not you, but Bitcoin at, it's funny how we all say you when we're talking about Bitcoin, right? Like you're Bitcoin or something, but that's $10,000. That's in the $10,000 range. Several people, lots of technical analysis, indicators that put Bitcoin at that level. 85% from the false top would still be around that 10,000. So, plus or minus level that we're looking at. So just interesting, technicals there in terms of, lower level price points on Bitcoin, but just a steady decline here. Nothing, no panic here, no capitulation, just, steady unwinding. And obviously the risks out there are with these DeFi protocols and, investment funds that are, multiple, leverage out there that are tied up with each other that, could potentially cause more of a capitulation event where, if price started all of a sudden just shooting down towards the 14,000 level, right in here, which is the next major market structure area, 13, 14,000, and then down to that 10. I mean, that you would see some panic selling at that point. If it cracks 19,000 again, starts getting down into this 14, 15,000 level, and you might see some panic selling, especially down at the 10,000 level. If it gets there, you'll see more panic selling than you will buying because people will be getting liquidated. They're going to have to sell. So there won't be any choices. And I'm not calling for that, saying that that's going to happen. The technicals would indicate that that is a real target, in that 13, 14,000 range, possibly 10,000, just based on where we are in the economy, based on what the Fed has yet to do, and based on their target of 2% inflation. They're basically saying we're not backing off until we get inflation at 2%. So that's what they're saying. And that's what they want to happen because we got an election cycle coming up. And, the current administration, Biden wants to be able to stand up and say, just like he's saying, we created all these jobs after, the pandemic, reopening and everybody could go back to work. He wants to be able to say, we fixed inflation. So you got to destroy the economy, put everything down bad so that, you look like a big hero. And this could be anybody, whoever's in office, could be Republican, Democrat. That's not one of those things. It's not a party line thing. It's like whoever was in office would be dealing with the same stuff potentially. And, just because of the leverage that's been in the system, we are where we are because of that Fed policy, monetary policy, all that kind of stuff, creating these asset bubbles. And then you have the war, you had the real, supply chain issues with the pandemic and stuff. So that stuff just happening. So, they want to be able to say, hey, we got inflation under control. We got a healthy job market. And we're bringing everybody out of the recession. That's exactly what they want. So, there's not a whole lot of incentive to prop markets up, nor can they do so because, again, like we talked about before, there's more risk and there's more downside damage and potential damage to be done if inflation is not brought under control. That will do more harm to the economy because that will hurt more people, especially at the lower income levels. And, deep recession at that point, layoffs, all kinds of things could potentially happen. So these are the things you need to have happen in order to get good balance. So this is the hash ribbon indicator, capitulation signal, still, kind of building, running a little bit sideways here versus like we saw last time where it just went off a cliff. And of course, that was when the China, mining ban happened, when the miners were banned and kicked out of China. Obviously, it was all a huge decline in the hash rate. The hash rate is still relatively healthy, but miners are now forced to sell. They're having to turn their machines off and all those types of things. And there was an article today talking about the miners, what they've been doing. We know they've been selling. They haven't had a serious capitulation yet, but they are selling to kind of keep everything going on. A lot of them sold their entire May harvest right here. They sold 100% of what they generated when they normally sell about 20, 30%. So, they're having to sell to stay alive. They have to pay back debt. They're operating at a loss right now. Energy costs are continuing to climb. So, that's just something to keep an eye on in terms of, potential of where the price action is going to go. So in terms of, what we're looking at in timeframes right now, the most probabilistic outcome and reality of where we are right now is more downside action. There's no catalyst really to exponentially drive the price, create a V-shaped recovery, because there's nothing coming in, pumping the kind of liquidity into the markets that's needed to have a V-shaped recovery in stock markets, in crypto, in anything. These are risk assets. They're all related. There's a lot of repricing and deleveraging going on, and there's more contagion out there waiting to pop. So the biggest problem is the markets are so fragile right now that any kind of an event or headline that generates risk or creates concern from an investment standpoint would create a big drop in the markets, crypto and stock markets. So what should we look for now? Maybe some sideways continuation or consolidation as the market, especially Bitcoin, continues to kind of bounce around in that 18, 19 to 20, $21,000 range. So, 18,000 potentially if it gets down there again up to that $20,000, $21,000 range, and just kind of work its way sideways until we get the next either some news that pops or we get the next inflation print. And if it's equal to or worse than what we saw last month, then you can expect that next unwinding, just like we saw last time. Markets will unwind in advance of the Fed. The Fed will leak what they're going to do, just like they did last time. Leak, they'll just send it out there and telegraph what they're going to do, so the markets can kind of continue an orderly unwinding and the next leg down of selling in advance of that rate hike. And then you'll see the bounce on the rate hike when they do what they say they're going to do. And then we just continue the journey and ultimately try to find a bottom in the markets. But right now, you can't call a bottom, you can't look for a bottom, and you can't expect a bottom until we get what the Fed said. Inflation comes down. That's what they're after. That's what they're looking for. They cannot stop, much less pivot, until we get inflation declining. So right now, it just doesn't look realistic anytime before the end of the year. So we should expect more continuation to the downside through the end of the year, see if inflation can plateau by the end of the year. If not, come down a little bit. I don't see how that's possible, but it could. And then, maybe as we get into next year, if, the issues in China are resolved, we have some, a little bit more clarity in terms of where the war is headed and what the energy supplies look like, things like that going into next year, then we can start to get a handle on, when we can look for recovery, when the Fed can back off. And, given the right conditions, they can come back in and start juicing the markets again. And then it's bull market on, and I'll definitely be giving those signals because I'll be right there with you. And that's when you can, that's when we'll be looking for those big moves, is when we do ultimately bottom and the Fed pulls back. And more importantly, when they, turn the juice back on and start printing again, or dropping interest rates, or whatever they do, reversing course if they can, if they will. So we'll just have to wait, see what happens. Right now, that's all we can do is just, be defensive, play the bounces, because there's going to be some nice little bounces. This recent bounce was 20-something%. One before that was 20-something%. So as we continue to work our way down, the bounces, might be a little less aggressive, just because of the environment we're in and the contagion in the space right now. Everybody's cautious, waiting for the next shoe to drop. So be careful. If you have anything locked up in some of these DeFi protocols that you can get out, you might want to take them out and hold your coins for a while till all this stuff clears up. You might want to watch out for some of these exchanges that are in trouble. Coinbase has a lot of things in the news out there. Binance has a lot of stuff in the news, but everything is at risk in bear markets, but they all made it through last time. So the only things that I'm concerned about are the DeFi platforms and protocols. If you've got stuff locked up in there that you can get out, you might want to get it out of there. So these are the things I'm looking at. I'll see you in the next video.